Ladies and gentlemen, good day and welcome to IG Petrochemicals Ltd Q4 FY21 conference call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nikunj Dhanuka, MD and CEO of IG Petrochemicals Ltd. Thank you, and over to you, sir.
Thank you very much. Good afternoon, everybody. On behalf of IG Petrochemicals, I extend a warm welcome to everyone for joining us on our call today. I hope you and your loved ones are safe and doing well in these difficult times. On this call, we are joined by our CFO, Mr. Pramod Bhandari, and SGA, our investor relations advisors. I hope everyone had an opportunity to go through the financial results and investor presentation which has been uploaded on the stock exchange as well as our company website. IGPL is one of the largest producer and the world's third largest producers of phthalic anhydride. We have state-of-art manufacturing facilities at Taloja, Maharashtra, which includes 4 phthalic anhydride plant, 4 malic anhydride plant, and 3 benzoic acid plants. Our facilities are engineered with technical collaboration with Lurgi, Germany, and designed and low-cost based process. This has resulted in lower operating conversion cost and back of cutting-edge innovation, which gives better yield and efficiencies. Our major clients are located in the western region of India. Therefore, we have a distinct sourcing and selling advantage due to its strategic location in the western chemical belt of India. The company can cater to local and international market with ease due to proximity to the nearest port. Post our PA4 expansion, we have one of the largest plant capacity at a single location. We have a capacity of 222,000 tons of phthalic anhydride, 7,660 tons of malic anhydride, and 1,300 metric tons of benzoic acid. We serve more than 125 clients, and our product have applications in 20 plus end user industries. Although more than 55% of our business are contributed from end users like paints, plasticizer, CPC, pigments. Consumption of PAN and other end users industries is on the rise due to innovation used as compared for a few years back in crop, science, specialty chemicals, etc. On the operation performance, Mr. Bhandari will update you later. As we are glad to report strong momentum in operating and financial performance during the quarter on the back of robust demand of our phthalic anhydride. PA4 plant, which started commercial production in the last week of December 20, has achieved optimal capacity utilization in Q4 financial year 21. I'd like to talk about the opportunities now. IGPL continues to explore the opportunities in downstream derivative chemicals with similar chemistry like malic anhydride and other specialty chemicals to diversify its portfolio through joint ventures and setting up greenfield facilities. As a part of our vision, we wish to have more than 30% of our revenue from other downstream derivatives and other specialty chemicals by year 2025. IGPL is also exploring in the field of green chemicals as future of our chemical expected to move towards clean chemistry. We are also evaluating opportunities to get into advanced plasticizers even before setting up a new phthalic anhydride facility by using existing PAN production by us. This will add significant to our revenues and EBITDA to our profitability. Now, way forward, our long-term vision would be to be a well-diversified chemical company and a leadership position in phthalic anhydride industry. We have undertaken some key strategic decisions in the last 2 to 3 years to surge in demand of our product and to diversify our business gradually. Overall, our holistic strategy will lead to greater visibility across geographies and provide better value proposition for our business partners. We are well placed to sustain our growth in financial 2022 on the track to achieve long-term objectives, increase our business from downstream derivative products. This is from my side. I hand over to our CFO to give you the brief of our financial performance. Pramod, to you. Over to you.
Thank you, Nikunji, and good afternoon to all the participants. I wish all of you and your family members are in good health and safe. I will be quickly sharing with you the financial highlights for the quarter and the year ended FY21. We have recorded a stellar financial performance for the quarter ended and continuing our growth momentum from the previous quarter. We continue to sustain a high growth trajectory for both our products, PAN and MEN. As you have seen, this is the best quarter in the history of IGPL for the quarter and the year ended. The total revenue for the quarter ended was 425 crore, which a growth of year-to-year basis 57%. And that growth is, in terms of the revenue, is mainly because of 3-4 reasons, which I will explain during the EBITDA. Mainly, it was due to the higher sales volume. As you are aware that we have completed our expansion. So this is the first full quarter post completion of our PA4 expansion. The gross margin has grown very well. EBITDA grew by 7 times for the quarter and in year by 4 times due to the various factors. I will just point out the factors which has contributed to the higher margin and profitability. The first reason is overall improvement in the market. International market, typically the last year the margin was around $100. This time it was between $250 to $300. The second reason is the integrated process, where because of the integrated process we are getting the 8% yield. Typically 8% yield means when we are putting the 100 kg of the OX, we are getting 108 kg of PA. Typically when the price of 600 to 700, so that 8% will give you that benefit of $600 to $700 per ton. Now the prices are at around 1000 and 1100. The same 8% will give you the additional benefit because there is no raw material cost involved therein. The third point of the higher profitability and the EBITDA is because of the higher volume of the PA and MA post our expansion, where in case of MA the cost is negligible. The fourth reason is not only the quantity which has included in terms of MA, but the price realization has increased significantly. Historically, the MA which we are producing is realizing around 10% over PA. Now, the last quarter it was 50% over PA. So we are expecting that MA is expected to generate, MA and BA expected to generate between 70 to 80 crore on annualized basis. So that has contributed significantly for the last quarter. In addition to that, we have witnessed excellent demand in the domestic market. Around 90% of our product we have sold in the domestic market in the last quarter compared to the historical average of 80%. You will be surprised to know that even that period, when we have sold 90% of product, the import in India is the highest. So you can imagine the demand in the domestic market. When the import was 45 to 47,000 and we sold similar quantity of product, still we are not able to fulfill the demand. Mainly the demand has come up because of 3-4 reasons. First is the pent-up demand because of the COVID first wave. There was a lot of pent-up demand was pending, so that has come up. Secondly, a lot of downstream players has announced their expansion, which has resulted into the higher demand. Third, the government has given a lot of concessions and the benefits in terms of the taxation, the PLI scheme, that has also resulted into. The fourth, we have also, apart from our existing customer, we have also increased our existing customer base as well as added the new customers. So every passing year, we are actually diversifying our customer base, which will create a more of a stability in terms of the overall demand. And the last, in terms of the overall profitability, typically we are paying the 34% tax. Now the government reduced the tax and we opted for 25%. So that has also contributed to the overall profitability. We have recorded the highest ever quarterly profit, which is stood at 100 crore, which is a growth of 24 times compared to the comparative last year. For the year ended, the total revenue was 1127 crore, a growth of 6% in spite of shutdown for 1 month in April and May due to the COVID. In terms of the segment wise, we are actually 95% of the revenue is coming from the PA and around 5% is coming from MA and the BA. However, next 3 to 4 months when we are going to, next 2 to 3 months when we are going to complete our advanced plasticizer, so that will contribute around 4%. So the PA will be 92% and other products including the MA, BA and the plasticizer will be contributing 8% of the overall revenue. During the FY21, we have made the total repayment of 69 crore of the term loan, which include 57 crore for the PA4 and balance for the PA3. Out of that 57 crore of the PA4, 42 crore was the prepayment. The loan was actually taken for 10 years for project, but since we have good cash flow, so we decided to prepay our debt. So today our debt equity ratio is less than 0.1%, and return on equity is also around 28 to 29%. In terms of the net debt calculation, we have not considered the investment. We have just considered the bank and the cash balance. If we consider the investment, it is further low. So if you look at the current performance, we believe in next 1 or 2 quarters, probably next 6 months, we will be net debt-free company. So basically, in the total investment which we have made in the plasticizers as well as the PFO, it's around 400 crore all put together. And we have used around 125 crore of that. That means company has put 275 crore of the equity in that project. Overall, our performance was very good for the quarter and year, which has strengthened our balance sheet and the cash flow. Our net cash position, including the investments, as on today is more than 60 crore rupees. Net cash flow from the operating activity stand at 183 crore compared to the last year, 84 crore. The another point which is to highlight is our net working capital cycle is less than 40 days, which is the best in the industry, in the chemical sector. In order to get the efficiency in our finance cost, and we have reconstructed and reconfigured our entire banking limits. We have introduced the 3 new banks, HDFC Bank, Standard Chartered Bank, and Qatar National Bank as a part of our consortium. That will help us to reduce our overall cost of funding going forward. We have Board of Directors already declared the dividend, which will be payable post our annual general meeting, 7 rupee 50 paisa, which is 75%. This is all from my side. We are open for the question and answers. Thank you very much.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nirav from Anvil Research. Please go ahead.
Good afternoon, sir, and congratulations on excellent set of numbers. So I have 2 questions, one on Malik and another on Thalik. So first on Malik. So if I was going through your presentation of 2019 where you had mentioned that the demand for Malik in India was almost around 55,000 tons. And in the recent presentation, we have been showing that it is around 75,000 tons. So the growth in demand is, I think, multifold in terms of the consumption pockets. So if you can let us explain like why the demand has so much gone up in India, and if you can break it up in terms of the sectors like how much is the demand growth for water treatment chemicals, insecticides, fungicides, the segment-wise growth, if you can help us explain. And a related question to this would be, because we are the only player in Malik and the consumption is so high, what is stopping the players to expand the capacities in India? So either it is because of the raw material availability, which is N-butanol, or the capital cost is so high that which is stopping the producers from setting up the plant. If you can help us explain on this point, sir.
Pramod, let me start with explaining to him on the Malik anhydride why no new capacities have come into India. That would be the first thing, because as you rightly said that N-butane is not available in India, and to set up a 50,000 ton Malik anhydride plant, the capex is also very high. So looking at both the situations, we have looked at and studied a number of times to set up a Malik anhydride plant through butane route, but we've not been successful in getting the butane, or either finding how do we reduce the cost so to put up a Malik anhydride plant. Now, Pramod, could you explain to him about the consumption pattern which is there?
Yeah. Typically, the Malik is used in various multiples, including paints, water-based chemicals. If you ask me, it is generally used in the, like as a citric acid, into the food ingredients also. So it is basically catering to the all type of industries, diverse industries. But the challenge in the India is what we are producing is from the wastewater of phthalic. Since India as a demand is growing at 8 to 10%. So that's why your point is right. When we have mentioned 55, today demand is 75,000 tons. But the challenge in India is there is no fixed source of N-butane supply available. typically from the refinery. It is very difficult to depend on the raw material for import. So if you have a tie-up with the refinery, you are setting a project near to the refinery, when the refinery is ready to give us the butane and take back the balanced butane, because it's not that you will use entire butane. Some portion of the butane, 33% you need to give back. So that is the preposition is very difficult to manage in India. That is number one. Number two, your question is right. Somewhere, because the demand is so high and you are catering only 10%, you should look at, we are actually looking at the opportunity to set up. But right now, keeping in view, the capex is 2 times of the sales. It doesn't look to be feasible. Even after the reduction of the taxation to 17% by the Indian government, we are looking at the opportunity at the right time when we believe that it is making commercial sense. We may look at that.
Okay. And sir, the second question is on phthalic. So what you rightly mentioned in your presentation also, that we are now the lowest cost producer of phthalic in India. So one point you explained that when we put 100 tons of OX, we get 108 tons of PA. But what other factors qualifies us to be a lowest cost producer when we compare to international players? So have we made, so have we made any process innovation? Or and so this is one. And second is, if we compare from FY15, 16 to currently, how much we have saved on operating costs? So let's say in FY16 it was X dollars. Now, so what is the situation currently? So if you can help us.
I will tell you. Basically, typically, whenever a phthalic plant is basically set up, typically nobody gives you the guarantee. In our case, it is the plant which is based on the German technology. Equipments are German, and catalyst is also German, which is based on the BSF. So that is give us the guaranteed 8% return. Actual return may be 8.5 to 9%, but 8% is the guarantee. Now, I will tell you the background, how it helps. Suppose you have a capacity of 2,20,000 ton. So you are producing at 90% 2 lakh ton. For 8% extra, you are producing 16,000 ton of the phthalic, for which there is no cost.
Correct.
Basically, there is no OX. So if you multiply it to the current market price of $1,000, it is 120 crore.
Correct.
Similarly, now look at malic and benzoic acid, where there is no raw material. At 7,600 ton, if you multiply it to 80 crore, that means 200 crore is company is getting in terms of the revenue, which is directly translated to EBITDA without having any raw material or the conversion cost. So that actually help us to earn the margin over and above the market. If you look at market at 250, 300, while you look at the company, it is coming around 350, 400, 500. That is the reason, the yield as well as the byproduct that make a difference. Now coming to the operating cost, since our all plants are located at a single location, we have a complete integration in terms of the power, steam and other products. So what happened is, when we start with the one plant, the conversion cost was 140, 150. When we come up with second and third plant, it was $100. The fourth plant which has come up, the conversion cost is $60. So overall, the conversion cost from 140 has gone down to now $80 to $90 per ton. Because there is a centralized management, centralized steam, the steam is, one plant steam is used in another plant. We have centralized the extraction of MA and BA. So there is a lot of savings. There is all the plants are a single location and completely integrated. So because of that, and third point which is very important is the raw material supply. We are getting around 90 to 95% of raw material from Reliance, that also delivered in our factory. So somebody which is not located in the right location, and our market is Gujarat and Maharashtra. So we are at the right place for the sourcing of raw material as well as selling to the domestic and international market. So these all factors contributed to the one of the lowest cost producer and the best realization in the market.
Got it. Thanks a lot, Pramod, for explaining in detail. And the last question would be on the advanced polymer side, advanced plastic side. So if you can help us explain how much of the incremental EBITDA we can get on this 8,400 ton.
Yeah, so 8,400 ton, which is expected to be commissioning in June or July, first or second week. That is expected as on today, because generally it is having the value of around 10-15% over and above the phthalic price. The revenue is expected between 70 to 80 crore on annualized basis, and then margin will be 15% over and above the phthalic margin for that.
Got it. Thanks a lot, Pramod, and all the very best to the entire team of IGPL.
Thank you.
Thank you. Thank you.
Thank you. The next question is from the line of Rohit Nagraj from Sunidhi Securities. Please go ahead.
Thanks for the opportunity. Good afternoon, sirs, and hope everything is well at your end. And congratulations for a great set of numbers. Really commendable performance during the year and COVID time. So the first question is on the greenfield capacity expansion. So where are we currently now, and are we facing any kind of delays from the environmental clearances side and our initial setup because of the COVID-related issues? So what is our plans in terms of completing the project? When is likely to be operational given the current circumstances? Thank you.
So, Pramod, do you want me to reply this?
Yeah, you can.
Yeah, so basically what we have done is that we have made the application with the Environment Ministry for the new capacity to be added. We already have done the detail engineering part of the new capacity which is there. So the detail engineering has been carried out. So we are now only waiting for the environment clearance to come. Once that is in hand, we will be able to start the project. We expect that the project will take anything between 24 months to 26 months to complete the project from zero date. And the zero date can only be, from the day we get the environment clearance to start the project.
To further add this, Nagaraj, because your question was specific, you need to understand that the new phthalic capacity is not for the purpose of generally in the market. IGPL is looking for an opportunity for the downstream derivatives. In that sense, whatever the new project is coming, the objective is to use more than 50% of that capacity for the downstream project. So even if it is taking some time to come, so we can look at the opportunity from our existing capacity to be used for the downstream derivatives expansion.
Right, understood. Is this going to be at one go, or will it come in phases the way we have expanded our capacity?
So it's a simple 80,000 ton capacity, including its derivatives. Derivatives, we can't discuss it right now because it's still under evaluation and we will go to the board. Derivatives means the downstream of the phthalic. So the new capacity is mainly for the purpose of derivatives, because our existing capacity is not even sufficient to supply to the domestic market. So if we wanted to enter into the derivatives and downstream, we need to have a new capacity. Otherwise, what will be happen is in the domestic demand, you will be taking some capacity out and supplying it to your downstream derivatives. So that is the reason, seeing the demand in the last quarter, we have decided to come up with the plan for the new capacity, which mostly will be used for the exports and the downstream derivatives.
That's right, understood. And a second question, generally on the global demand supply. So we are expanding capacity. How do we foresee the global demand supply situation? Are there any other capacities which are likely to come? Because this capacity, as you rightly explained just now, that it will be partially from domestic demand perspective and partially from exports perspective. So how do we look at from a global demand supply perspective over the next maybe 2 to 4 years? Thank you.
So there are two ways to look at that. In global market, the demand and supply has got the equilibrium. Even China is importing some portion of the phthalic anhydride. Now the phthalic anhydride typically used in the various paint, plasticizers. Now a lot of new industries are being added. A lot of new capacities being added in India. Like you can say in the paints, a lot of new capacity has been added by the government announcement. Typically, apart from our existing customers who are expanding, there are new customers which are being added into this. So let's look at the global scenario. What is happening is the world is looking at China plus one. Typically, all the capacities are, or specialty chemicals capacity are built in China. Now everybody in the world market is looking China plus one. So if you look at all type of specialty chemical in India, companies are under expansion. So to feed the requirement, we need to have the additional capacity. When it comes to India, now typically it is very difficult to import. I will tell you 2-3 reasons. The first reason, if the company is expanding or the country is expanding, like China is expanding, they need phthalic for their own requirement. Second, the logistic cost. The logistic cost typically was $50 to $60. Now it's $130 to $150. Third point is basically the foreign exchange rate, which was typically 65, 70. Now it's 75. So you put all the factors together, including the risk, you are getting the phthalic in around 45 days. So global market seems to be equilibrium. Earlier, there was a challenges last year in terms of China. Now it seems to be diminished completely. And China is also increasing their infrastructure. The global market seems to be in balance. However, whenever there is a shutdown or some compulsory shutdown of the capacity for whatever the reason, then you see suddenly there is an equilibrium in the market and margin jump up. So we expect that there has to be average margin. We are not asking or expecting that 400, 500 or probably 100. When we look at the phthalic business, it's not correct to look at 1 quarter or 1 year. Let's look at the average of 5 to 10 years. That will make more sense rather than looking at a particular quarter. Global market seems to be balanced. More and more avenues are being added where the phthalic can be used. In India, like we have started UPR recently. In America, more than 25% or Europe, 40% goes to UPR. India has not yet started. Entire infrastructure of India, including road, bridges, the pipes, has to come up in terms of UPR, because right now we are using basically the metal base or iron base. That has to change. If it required to be changed, then government need to change the policy. If they change the policy, we will see the 20% growth for next 20 years in phthalic. So I'm not contemplating anything like that, but I'm saying the opportunity for the phthalic is huge because of its multiple uses in the multiple industries. Thank you.
Yeah, understood. Thanks a lot and best of luck, sir.
Thank you.
Thank you.
Thank you. Any participants who wish to ask a question at this time, then please press star and 1. The next question is from the line of Ranjit Sirumalai from B&K Securities. Please go ahead.
Yeah, hi sir. Thanks for the opportunity and congratulations on a great set of numbers, sir.
Thank you.
My question is mainly on the profitability front. We have seen one of the best quarters, but what kind of a confidence that you get from the marketplace that these kind of a profits are likely to continue, or is there a view that this is just the start of a new cycle as far as profitability is concerned? The second part is that recently DGTR has recommended an EDD on phthalic anhydride from different countries, China, mainly the ones where we have been seeing the imports. Though the finance ministry is yet to notify that, but what kind of a increase in the profitability, or how do you see the EDD impacting the performance? These are the two questions. Thank you.
So the first question on the profitability, compared to the historically when we were operating only phthalic, now we have malic, and the malic capacity has also gone up by I think 40%. So malic revenue is expected 80 crore. Then we have the yield. Now we will be seeing going forward. I am not commenting on the margin, which is the international market. You will see a lot of stability in terms of profitability because of the yield and the byproduct and the advantage of the scale. So I will not like to comment whether the margin will be 400 or 100. Let it be market driven rather than talking about the 1 quarter. It's better to talk about 5-year or 10-year average, which we believe will be between 200 to 300. So for IG, because of the advantage of the malic byproduct, now we are coming into the downstream, which is the DEP plus the yield. That will basically enable us to have a sustainable profit margins going forward. Now, coming to your second question, the government is actually evaluating the anti-dumping duty, but I think that has gone to the finance minister. However, all the key imports, which is happening from 2-3 countries, there is already a custom duty of 7.5%. So it is up to the finance ministry. It has been recommended by commerce ministry to finance. They need to okay it, and then it will come into the notification. Till that, we need to wait. We are as good as you, because everybody has to wait till it finally come up in the notification. Thank you.
In the event that it is likely to go through the finance minister, or just as a case, what kind of an addition to the profitability one can witness, or is it like that we will see at least the volumes or the imports would get restricted, and to that extent we would have this volume advantage in India? How should one see the EDD panning out?
Right now also, typically we are selling 70% domestic. Right now, because the demand was very high, we were selling 90% of expanded capacity. Earlier, without expansion, we were selling 70-75%. Now with expanded capacity, we are selling 90, even without the duty in place. So you can imagine the demand in Indian market. If Indian story in terms of infrastructure growth, we believe it's a next 20-year story, it continues to grow. Right now, it is very difficult to predict for 1 quarter or a year because of the pandemic. Nobody knows. But in long term, we are sure that Indian demand will grow between 7 to 8% going forward for next 20 years.
Sure, sir. On the second part, if you can give some bit of rough estimates on the 40 crore expansion that you are doing in advanced pesticide.
Yes.
What kind of a turnover or the profits one can expect from these investments?
So it will be adding around 60 to 70 crore of revenue on annualized basis based on the today's prices, and it will be adding around 15% EBITDA of that revenue over and above the phthalic, because the raw material mainly for that product is the phthalic anhydride.
Inclusive of phthalic, it would be much higher than.
Yeah. It is phthalic plus 15%. That's what I'm saying.
Yes. Okay. Sure. And sir, finally on this greenfield expansion plan that you have set, you said you are looking more into the downstream products. So can you a bit elaborate on these downstream products of
So
the
I
PA
think
that you intend to get
it will
into?
not be right to comment on that, because downstream there are multiple products which is being evaluated. Let it be finalized and get it approved from the board, then we will be able to discuss about that.
How soon can we expect the board approval on this, sir?
Probably,
What I would like to add here is that as you know that the company's financials are very strong, and we would like to expand in various fields. Our main focus is basically the downstreams of phthalic anhydride, malic anhydride, and we are studying a number of projects which are there. As far as the green chemical is concerned, that is a very new area, and we would like to venture into that. So we have done very detailed study, but right now the only thing which we are studying in that is that where do we see, because ultimately it will be replacing oil-based chemicals which are there. So once we know where oil is going to stabilize, we will be in a better position to take a call whether green chemicals will be feasible or not, and whether governments of every country will make it mandatory for people to use green chemicals rather than using oil-based chemicals. So these are the various studies which we are doing. Once we are very sure about what kind of situation arises in the future, we will take a call. But we do have very concrete plans on certain products which we would like to produce as far as green chemicals are concerned.
So you need to wait for some time before we conclude in this.
Sure, but green chemicals are likely to be in the similar chemistry, phthalic, or it is going to be completely different?
No, completely different. It's will be a new product, new line, but it's like a commodity only. It's basically a specialty chemicals, more green basically. Nothing to do with phthalic or malic.
Sure. And sir, one final question before I get back into queue. It's like for the greenfield expansion, at least the 80,000 tons that we are planning to kind of go forward. We do have the raw material tie-ups in place, or we are? How do you see the raw material availability for our expanded capacity?
So if you look at Reliance has additional capacity, and they are exporting right now quite a large quantity into Asia. So we have spoken to Reliance. Plus, we also know that in Singapore there is ExxonMobil which has orthoxylene. Plus, we are also talking to them. So we feel that as far as raw material is concerned, there is availability in India and in Singapore, which will be able to cater to the additional quantity which will come. So we don't see any problem in that.
Yep. Thank you very much, sir, and all the best.
Thank you.
Thank you. Thank you.
Thank you. The next question is from the line of Chirag from Budrani Finance. Please go ahead.
Yeah. Good evening, sir. Can you give some sense on the volume for full year or say for the quarter?
So typically we avoid giving the volume directly, but we are running at optimum capacity. You can say 17,000 to 17,500 per month basis.
Okay. And sir, this new facility PF4 would work at optimum utilization by when?
We have achieved in last one quarter. It was at optimally capacity utilization, more than 95%.
Okay. And sir, on this greenfield expansion, you are talking about exports. you think that the demand in India demand is satisfied, hence export, or
Not
how
exactly.
does this thought come?
Indian demand are still very high, typically 450 to 475. IG produce 2, probably other competitor produce 1 to 140. Still, India need to import 1 lakh ton, but still we have certain customers with whom we have the long-term relationship, and for last 10 to 15 years. Typically, we are selling it to them for so many years, but right now, because of the higher demand in domestic market, we are not able to sell. So probably next 1 or 2 years, when we are planning the greenfield, some portion will be used in the downstream and some portion for the purpose of export or domestic. It's open for that. It's not specifically for export. But we wanted to have 20% export as a part of overall revenue.
Okay. And so just one last thing on the results declared on the consolidated basis, your employee cost has gone up. So what is that on account of?
So yeah, your point is right. Basically, we have made the provision because there are some Mathadi workers which has been basically taken the retirement or retrenchment, which is 35 to 45. So on that account, the provision has been made in the books of accounts.
So sir, the normal run rate would be 15, 16, 17 crore kind of?
It is 15 to 16 crore per quarter basis, but this time it was 25 because of that reason.
Okay. Okay, sir. Thank you.
Thank you.
Thank you.
Thank you. The next question is from the line of Aditya Khetan from East India Securities. Please go ahead.
Yes, thank you. Yeah, congrats on a good set of numbers. Sir, my first question is on the advanced plasticizers. So in the last quarter conference call, we had told that the advanced plasticizers capacity, almost 80% has been commissioned. So still, why it has been shifted to July? Any particular
it has not been commissioned. That is under construction, and we will start trial in June. And because of the COVID, because you are aware of that, there is a COVID, lot of technical guys are not available. Even there are laborers also not available. So it's actually extended by 2 to 3 months. I agree, because we told it will be started in April. Now we are expecting it to commission in June.
Okay. Okay, sir. On the second question, so on a QOQ basis, our revenue has gone up by 35%, but our other expenses is down by 6%. Is there any one-off gains in this quarter which we have recorded?
Not exactly. Basically, what happened is in this quarter, the revenue has gone up because the prices of OX has gone up and prices of the accordingly PA has gone up. That is one reason. The second reason was the MA. Because of the expansion, the PA quantity increased, MA quantity increased. Typically, we realize 10% higher in MA than PA. But this time, we realize 40 to 50% higher price realization in MA. That is the reason revenue seems to very high.
Okay, but on a run rate wise, if we look the other expenses gone up. So in Q3 FY21, is there a component of the catalyst change we had taken? That is why it is high in Q3?
Yes. And the other expenditure has gone up mainly because of the cell expenditure, that also logistics. When we export, typically logistics cost was very low earlier. Now this quarter it has become 2.5 times, because similar thing apply when somebody imports. So when we are exporting including our logistic cost pricing. So logistic cost was very high, that we are not putting in selling expenditure, we are putting in other expenditure.
Okay. Sir,
that is the reason.
Is it possible to share the phthalic anhydride and the OX average prices for Q4 FY21?
I think generally we don't share, but I can tell you on approximate basis, it's around 700 for the phthalic and 1000 plus for the 700 for OX average and around 1000 plus is for the P.
1000 plus is for PA. Okay.
Yeah.
So after recording the highest spread in this quarter, now we had witnessed some decline in the spread in the month of April and May. So how are you seeing this trend now?
I think basically you are aware of that because most of the Indian markets or the various states are closed. So basically this is a temporary phenomena till we come up with out of the COVID. There is uncertainty in the market. But we are sure that India, once it has come up, there is a strong demand in domestic market, and the spread is a matter of time, because now global market has started opening up. We are also started doing more exports, because India is yet to start completely, because most of the states are under the shutdown and operating at very 50-60% capacity. It's a matter of time. Let's not look at quarter to quarter. Let's look at 5 to 10 years point of view.
Okay. So, sir, so what could be the sustainable spread you see for the next 2 to 3 years then?
It's very difficult to predict in this scenario right now. So it is better that any number which we can give to you will not be correct. It could change drastically. So it is better that one has to only look at that today as a company. IGPL is operating at 100% capacity. Our capacity utilization is still at 100%. The numbers which you are looking at, which has shown higher revenue and margins, is because of we commissioned a PFO plant, which is attributed to a higher revenue which is there, and even our margins have improved because of low cost of production with our PA4 capacity which was added. So looking at all that, I see that we are in a very good situation, and we will continue to operate, but it's very difficult to predict what will be the margins and how this will plan out, because right now when we were talking about 2 months ago, India was not looking at any kind of a second wave of COVID, but this second wave of COVID has been a major disaster in India, and a lot of states are shut down, and we do not know how this will plan out going forward. All we can say, and we can predict, that luckily we are as a company still operating at full capacity, and our margins can move up and down depending on the demand and supply. But we expect that the demand will come back very soon once things open up. I can understand that you all have this thing to know what will be the delta, but it's very difficult to predict right now, and we do not want to predict something which we do not know what the future lies because of the COVID situation.
So I think let's wait for the every quarter end. We will be discussing with you over the call whatever is the actual margin. Thank you.
Hello. Thank you. Mr. Ketan, request you to join the queue for any follow-up. The next question is from the line of Nirav Chimodia from Anvil Research. Please go ahead.
Yeah, thanks for the opportunity again, sir. The question is on the interest cost. So what you mentioned in your initial comments that you have some 3 banks on the board now. So how would it help you to reduce your interest cost? So because what I understand is we have an ECB loan also, which is at a very nominal rate of interest. So these 3 banks which have come on board is for the working capital requirements, or they are also for the term loan?
All 3 banks has come up as a part of our consortium for PA4 working capital requirement. We have tied up with them because now basically we have created a mix of the PSU bank. We have SBI, Union Bank, Central Bank on one side. Another side we have the Standard Chartered Bank, Qatar National Bank, and the HDFC Bank. So we have kept a fair balance of good private sector, MNC banks, as well as PSU banks. So compared to the PSU bank, the cost of funding from the private sector bank is much lower, which will provide us a lot of savings in interest. And typically we have also prepaid major portion of our loan also. So today we look at the net debt is around 60 to 70 crore. We believe in next 6 months we will be zero net debt company. So in terms of the overall costing, our costing for the term loan is less than 2 crore per annum in terms of interest. Balances, financial charges for working capital, LCs, forex, and all that. So if you compare to the last year, our finance cost has gone down because we have prepaid the loan, and our overall finance cost for the finance charges has also gone down even after expansion of PA4. So we continue to maintain the very strict control over our finance cost, and we believe that it will be under the same range.
Okay. But do you foresee any savings in the percentage cost, like previously, let's say it was X and now it has gone down by 2%, 3% with these 3 banks coming on?
Yeah. Typically, ideally, the cost on an annualized basis has to be post PA4 20 to 22 crore, while it is now 15 to 16 crore. So you can see that there is 10 to 20% reduction overall.
Okay. And sir, second question is on Thalix. So what you mentioned is we have an integrated complex with 222,000 tons of capacity. So if one considers on a replacement cost basis, let's say if somebody wants to set up the same capacity in India, what sort of cost he needs to incur for a greenfield project?
So I think today, if you are talking about the replacement cost of entire complex, including phthalic, malic, plasticizer, and ATP plant, it will be between 2,300
we cannot,
to 2,000.
one minute, we cannot really predict because we have not yet studied what will be the capex of a greenfield project of this magnitude. But if you look at, we do know that an 80,000 ton plant is costing us 600 crores. And here we are talking about 220,000 tons, which has been set up over the last 20 years with a lot of efficiency and innovation, this thing which was done. So with a 50,000 ton where we are looking at 600 crores, you can yourself multiply and take out what will be the value to put up a 220,000 tons TA plant, malic plant, the phthalic plant, and benzoic acid. Plus we have got the ETP plant which is there. So it is very difficult to really give you the number because number one, we do not have that number with us. We only know that an 80,000 ton plant will cost 600 crores.
Okay, and sir, one of our competitor also is setting up a new greenfield project in Gujarat. So if you can give some comments on the same, because he is also coming up with a substantial capacity. So any comments on
you see, the thing is that he is a big consumer of phthalic anhydride. So the capacity which he is going to set up is going to be consumed internally by him. He will not be a merchant seller of phthalic in the market. It will be a very small quantity which will come into the market. So basically, that is what, and the kind of growth what we are witnessing in India, it was very much on the cards that additional capacity of PA needed to come on stream. So if you look at, we feel that because he'll be consuming the phthalic himself, we do not feel any threat. We do not feel any threat that it will really change any dynamics in the market of phthalic anhydride.
But sir, the existing producers need to divert their production to either export or finding some new customers, no? Because I think he is currently buying from the current producers. So if he is consuming internally, then probably we have to find some other markets, right?
So if you look at today, India is importing about 100,000 tons plus of phthalic anhydride.
Okay.
So what will happen is that by the time he will set up the plant, it will be 2 to 3 years time. Okay. And then we are looking at the kind of growth which we are witnessing in India because of the infrastructure growth which is happening. Plus all our existing customers are today are increasing their capacities. And mainly this is because I think that, a lot of Western companies today are looking at India as their sourcing now. So a lot of interest is on export from India to the US or the European markets which are there. So because of that, we feel that India, the kind of growth which we will witness in India in the next 2 to 3 years, we will need additional capacity of phthalic and its downstreams. So if you look at both the capacities which are coming up, which is of ours, which we are going to set up, or one of our consumer is setting it up, both are basically setting it up to consume internally and produce other plasticizer or downstreams which will be exported or sold in the Indian market.
Got it. Thanks a lot for answering the question in detail, sir, and all the best.
Thank you.
Thank you. The next question is from the line of Push Gangar from Care PMS. Please go ahead.
My question is on, so any new capacities are coming up in global, any big capacities coming up globally?
So if you look at today globally, if there's any capacity which is coming up, it is mostly either India or maybe in China. So China, we do not really know where it stands because we do not get correct information out of China what they are doing with their capacities, and the numbers which we get are all very much what they like to tell to the world. So as far as India is concerned, that this is the only second country where there is capacity coming up, which we are looking to build, and there's another player which is coming up in India, which is a big consumer of phthalic. So apart from that, we do not see in the US or the European or any other Asian market any announcement of new capacities.
Sure. And what I understand is earlier, because of US-China trade war, the spreads, when they decreased earlier, the US-China trade war was a major reason for demand destruction, which resulted in spreads falling. So now with US opening up and the demand picking up, what is the outlook globally with respect to demand for phthalic?
So if you look at what we are looking at is that the Indian demand is very robust. There is a lot of Indian growth which is happening. As Pramod mentioned some time back, that IGPL, which was before its capacity increase, was selling only 70% in the local market, and we were exporting 30%. But with our new capacity which came up, which contributed additional quantity, now we are selling almost 90% in the domestic market. So there is a lot of demand within India, and we are seeing a lot of new areas where phthalic is being consumed. Plus all our downstream consumers are increasing its capacity. So we are right now looking at India as a very good story as far as growth is concerned. Secondly, if you look at as phthalic anhydride is concerned, we see that in Middle East there is no phthalic plant, and there is once everything comes back to normal, there will be demand in the Middle East, where we are in a very good position to cater to that. So we are very happy within looking at the Middle East and the India story, and we expect that there's no new capacity in the near future coming up, which so there will be any destruction on the demand supply side.
Sure. And last question, with respect to current lockdowns, are we operating at full capacity, or has there been any issues with labor or something else?
No, we are operating at almost full capacity right now.
Okay, sure. Thank you.
There is no issue of any sort. It's only that the plasterizer plant where we need to bring outside labor, there could be a bit of a delay there. But as far as our existing capacities are concerned, is operating at full capacity.
Okay.
Is the question answered, Kush?
Yeah.
All right, thank you. The next question is from the line of Manan Shah from Moneybee Securities. Please go ahead.
Yeah, hi. Congratulations for the good set of numbers, and thank you for the opportunity. Most of my questions have been answered. I just had one bookkeeping question. Since that P4 plant has come online, I would assume that the capex for that would have been capitalized, and plus the advanced plastic plant you mentioned is around 40 crores, but we still see around 132 crores of CWIP in our balance sheet. So if you could just mention what is this CWIP regarding?
No, basically the one is the DP plant, and one CEP is basically we have done some investment in our subsidiary for the purpose of MA plant, which a JV has been called off. That is on that account, and balance is on account of the DP plant, basically the advanced plasticizer, which is going to be implemented.
I'm sorry, I didn't get about the JV. So can you just?
We have a IGPL International on consolidated basis. We have a JV with the ANOC earlier. We were exploring the opportunity. We have done the detail engineering, basic engineering, and concluded to go ahead with that plant. But unfortunately, because of non-availability of the raw material at right prices, we were not able to do. We continue to explore that opportunity outside India for that purpose. So that is on that account, certain amount, and balance is on account of the advanced plasticizer.
Okay, so what is to happen of this JV then? So because that.
I will explain to you. Basically, we entered into a JV with ENOC, which is a Dubai-based company, and we were setting up a malic anhydride project, which was in partnership with them. Finally, when we did the feasibility study and we signed we did the detail engineering, we realized that the cost of capex as well as operating cost was not very feasible to set up the project. So we had to then pull back and stop the project, because it didn't make any sense to put up a project where operating cost was very high, because this plant was supposed to be set up in Dubai. And Dubai, the cost of water and and the malic anhydride melts at 52 degrees. So the temperature out there sometimes even goes to 50 degrees. We needed to air condition our warehousing, and there were many costs which was not making the plant very feasible. So with all that detail, when it came up, we had to basically decide to pull back, and there was this cost which was incurred when we were going to go ahead with the JV, and so we had to write back this.
So what is the amount that has been invested in this JV till date?
About 10 crores.
Okay, but we have around 132 crores as CWIP, and 40 crores of this is...
It is basically, there are two things. We have one offices also. For that purpose, we have purchased the office, including that the 15 crore of that, and then around 50 crore of the advanced plasticizer, all put together.
Okay.
Thank you.
Thank you.
Thank you.
Thank you. The next question is from the line of Keshav from Raksan Investors. Please go ahead.
Hi, sir. Thanks for taking my question. So most of my questions have been answered. I would just like to know that during the 5-year span of 2014 to 2018, we saw very healthy accrual of cash due to successive increments YOY in margins, which was followed by a correction during 2018 to 2020. Sir, what were the key drivers for this? I mean, what was happening back then leading to better margins? Why wasn't our top line though growing during that while? So, sir, how does the business work in that regard, and what do you see for future? Because you said in your presentation at the beginning of this call that you have taken key decisions in past 2-3 years. So do you see any visible fundamental shifts for the top line and bottom line growth going ahead?
So I think let's put that question into the two part. IGPL is consistently every 3 to 4 years building up a new plant. So when we are increase the capacity, revenue tend to increase. However, there is a direct or indirect linkages with the crude prices. When the crude price is 100, then of course your OX price is high and the PA price is high. So it's not correct to look at only revenue, because revenue may be dependent upon a lot of other factors like OX and the PA price. If PA price, I think 1920, the PA price has gone down for $500 to $600. Today it is $1,000. So strictly to compare the revenue to revenue is not correct in terms of quantity. We are consistently maintaining our capacity utilization at 91 to 92%, which is the industry standard. And now also with PA4, the quantity has increased for both phthalic and malic anhydride, and the prices has also gone up. So if you see that today we have declared around 424 crore of the revenue. If you make it annualized based on today's prices, it is coming around 1600 to 1650. If you add the advanced plasticizer, which is expected to start in the next 2 to 3 months, then it will be coming around 1700 to 750. So that revenue is consistently will be there till we come up or implement new expansion plan. However, if there is a decline in the prices for the raw material and final product, then revenue will change accordingly. So it's all about what we are looking at is the quantity which we are producing and selling. Prices may change based on the derivatives from crude.
Sir, even on the margin front, I understand on the revenue bit.
Yeah.
But on the margin front, we went from 5% to nearly 23% in 2018. So what were the drivers during that time? Because our profitability also increased.
When we look at the historical number, when we don't have the malic and benzoic acid plant, and our capacity was less than 1 lakh ton, then the advantage of yield was not available. Second, once we get into more than 1 lakh capacity, like 160 or 220, we are getting the yield extra 8%, which gives us the additional advantage. The second advantage is the overall operating cost, which we reduce. And third, when we are getting into the malic and benzoic acid, which is the byproduct, that provided the more visibility and stability to our profitability. Typically, till last year, before completion of this expansion, it was annualized around 35 to 40 crore. Now with the current pricing and the quantum which we are producing, it is expected to be 80 crore. So because the malic and benzoic acid, the byproduct, and the yield, they contribute roughly around today's pricing at around 200 crore. So that 200 crore is directly coming to the company from revenue to EBITDA. That will create a lot of stability into the market.
Okay, so basically we're saying that because of economies of scale right now, and as well as
and byproduct and all put together.
Yeah. Okay, sir. Sir, another question. sir, in the CPC pigment segment, I wanted to know what it was written that you have a market in photovoltaic cells as well. So that is also an end market. So I wanted to ask about how the domestic demand has been faring.
So typically we are selling to across more than 20 industries. The main is coming around paint and plasticizer. Then we are selling to specialty chemical, agrochemical, CPC, pigment, PVC. But they all are between 10 to 15%. The main is paint and plasticizer, which roughly comprises 45 to 50%. And all that industry, whether it's a paint, plasticizer, pigments, everybody is growing at 8 to 10%. So that has created an opportunity for us to set up another plant, because demand is so strong in probably last 6 months in India that even if we wanted to supply, like last quarter, when we sold 90% of our product in domestic market, the import in India was the highest in last 1 year, in last quarter. When we sold 90%, still import was highest. So you can imagine the demand.
Okay, sir. Sir, the reason why I was specifically asking CPC is that the Indian solar output will be consistently increasing for at least for the next 3 to 4 years.
Correct.
And the procurement is for the government tenders is happening through DCR route. So do we also fall in that bracket? Would we also get an advantage because the quantum is huge?
I think we are supplying around 5 to 7% to them. And we are consistently maintaining even after our increased capacity.
Okay, sir. Okay. Thank you, sir. That's all.
Thank you. Yeah.
Thank you. Ladies and gentlemen, due to time constraints, that would be our last question for today. I now hand the conference over to Mr. Dhanuka for closing comments. Thank you, and over to you, sir. Mr. Dhanuka, you're not audible, please?
Yeah.
Yes, sir.
Yeah. So basically, thank you very much to all of you. And I would like to just add here is that, India is currently a net importer of both phthalic and maleic anhydride, and about 25 to 85% respectively. Hence, there is an ample room for import substitution. With our new capacity expansion and technical expertise, we are well equipped to garner these opportunities. We are looking forward to penetrating new clients and bring in more value addition for them, new and application opportunity, new capacity expansion, new geographic markets, and ongoing cost efficiency are going to be the growth lever for our organization. With this, I conclude the call. If you have any further queries, please contact our CFO, Mr. Pramod Bhandari, or ISGA Investor Relations Advisors. Thank you very much.
Thank you. Thank you very much, everybody.
Thank you.
Thank you very much. Ladies and gentlemen, on behalf of IG Petrochemicals Ltd, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.
Thank you.
Thank you.